Afternoon. Thank you for joining us. We thought this was time to do a Zoom call. We've had a lot of questions on everything going on with the debt ceiling and a lot of other questions about market timing, of course, right? So we thought it'd be a great time to have a call. As always, if you have questions, raise your hand. We can unmute you or use the chat feature and we'll read those towards the end of the call. Otherwise, I'm going to go ahead and turn it over to Dave.
Hello and welcome. Thank you, Jan. All the talk lately, it's just really incredible, the hyperbolic level of doom and gloom, as if we've never faced debt ceilings before. But there's more to it, and I've gone back, I've talked about this in other Zoom meetings. I get it. There's just doesn't seem to be anything going right. But I always come back to the idea, as we think about things like this, are markets reacting normal? Yeah. And what are people finding so much angst about? What is really the bottom line in all of this? And I do have to come back to, a lot of it is made up noise, and it is made up. They don't sell anything if you're not really kind of fearful. You're not going to go buy a bar of gold that produces nothing unless you're afraid inflation is going to blow up the US dollar. And what about those digital currencies? Oh my word, we don't even know what they are, but we're learning we need to be panicked about it. They're world-ending problems that won't get resolved. And of course, that is an issue, but it's not the end of the world either. It really isn't. And this all feeds into this general, I categorize it this way: lack of leadership. We don't believe collectively that they are going to solve problems. And I don't care if you're Republican or Democrat. What is it? Something like 70% of the country thinks we're on the wrong rails. That's a lot. That's a lot. I don't know that you get 70% of the people that are going to agree that the sun is that the sun is going to come up tomorrow. We don't agree on anything, but we are extra fearful when we don't feel that there's leadership, whether it's the Federal Reserve, it's the Treasury, it's this administration, it's what's going on at the border. All of these things pile into our psyche to go, wow, and now we can't even agree on a debt ceiling, and everybody's telling us from Janet Yellen on that this is the world-ending event, that we've never been here before. So let's take a look at a couple of charts here, and we'll fly through a few of these and just kind of talk about, but think of these in the context of how you're feeling about things. How do you feel about the world you're in? Because this isn't just data, it also needs to come in with this thought. Yeah, maybe not this thought, but more like shutting down the thoughts of, yeah, comma, but. Yeah, I see what you're saying, but. I was reading, yeah, but. I get it, okay? And we all come into that. But one of the things that I want to remind everybody of, markets fluctuate. They actually do. And we feel, though, in times of heightened intensity that, wow, the market is so volatile. But it's not. It's not volatile right now. It's really kind of normal, and even some of the ratios, to get into the weeds a little bit, they've come down a lot. We have periods of volatility, and now we're back to actually below average volatility. It truly is. So when we talk about volatility, it really isn't there. It just feels that way, which again gets me back to how we read it because of the fear in our eyes, in our hearts, in our souls. And what we feel is that things are out of control and it's a problem. So let's go to the next slide. Here is, let's suppose it does blow up and nothing good happens and the adults are not in charge in the room, and here we are, and we get closer. Like 2011, which everybody, that's when the S&P got downgraded. And then you got people on TV, people like Kramer, they're like, Yeah, it'd be worth 10% if the market, if this gets settled. And I'm like, why would it be worth 10% when the market isn't down 10%? It's not down this year to date, as we approach the end of the world deadline. But nobody watches TV. Nobody cares at all when markets are just quiet and going up. So we have to literally add a whole lot of intensity to the report about how close we're getting to everything. Otherwise, nobody's watching because everybody's screaming. And we got to quit that. We got to quit watching, honestly. But look what happens if stock market is down, then it just pops. And then if you decide to buy bonds and they're up a little bit, they're not up a lot. Well, why wouldn't they be up a lot? Well, they should be because everybody's scared, right? And when we went to 2013, even a bigger pop. How are you going to trade that when markets are thinking in advance? It's going to go down, and then you're going to catch the bottom knife, and then it rallies back. You're not going to do that. Let's roll on. I think that this reminds me, and this past weekend, Warren Buffett had his big deal. Maybe that was 2 weekends ago. I'm probably a week behind. And there's always in the financial world, it's all this talk. And one of the things I reflected on the radio show was how big a deal it is to be reflective about the markets, and how I don't think anybody is going to be tuning in this weekend to the greatest investor of our lifetime. And he doesn't predict what's going to happen. And he makes it this clear point: we never have, and we never will. It's completely irrelevant. But what is financial media? It's always talking about what the market's going to do. Irrelevant. It's not what you have hired us to do, nor have you hired us to say it's all going to be okay. But to have a perspective that doesn't jump around with every single bulletin, or pretend as they spend more like 12 hours a day contemplating and interviewing person after person about what the market's going to do. And nobody ever sits down and takes a, okay, wrong. And I'm not making fun. It's not possible to know what the future is. But what is important to take away from this is we don't have to know. So stop it. Because the more we think about it and the more we try to do it, the worse we do, as you'll see. When we think about this and to go back to all of the things that the market was telling us don't do not invest in the market. This goes clear back to 1970. Why 1970? You've heard me talk about it before, because it was a horrible decade. And we're not trying to prove something right when it's wrong. We are actually trying to be good about our experiments and saying, what if we have this idea that stocks are good, but let's try to prove it wrong. So let's invest in the worst time possible. And you see all the data points. I don't need to point them out. In the 1980s, which was a really good decade for stocks, the market crashed the most ever in history in one day. Ever. It was when, at the beginnings of the Iraq War, when of course, all of the really smart people knew that if you dropped a bomb in the oil-rich country of Iraq, we would have a nuclear winter because it would light all the world's oil on fire, or their great reserves, and that would put a big black cloud in the sky. We would all die. Yep, that was reported. Just like when we were, if you're my age, we were in junior high knowing for sure, because they were teaching us that the world would be orange by now. No, I'm sorry, I mean 1980. Yeah, it's like it was going to be orange 40 years ago. Give me a break. They know nothing, and everything's catastrophic all of the time and over-reported. But we went through a lot of stuff since 1970. I mean, a lot of stuff. And what does this chart tell you? Just what Warren Buffett says. You don't have to know anything, except this works. I always talk about the gravitational pull to the equator of 10%. There you have it over that period, 10.5. In spite of all of the doom and gloom. Okay, for a little more modern history, because 70s were too long ago, let's look at the next chart. Bam! This is all through, this is if you manage to pick like the worst day in 2007, the market high, and watched it crater in the Great Recession of 08 and 09. That was a horrific 8.8% after we went through another bear market and another one, by the way, 1 in 20, another one now, 22. The Fed doesn't know what it's doing. Interest rates have been raised crazily. I've talked about that endlessly. They kept digging the hole, injecting more and more capital, even when they admitted that inflation was not transitory. I don't get it. There's lack of leadership. In spite of all that, markets work, but it won't stop the doomsdayers from beating over your head and telling you with the debt ceiling, with this and this and this and this and this, it won't work. This time it won't work. And I always say, come back to this. It's a big bet because it always has worked. We have periodic disruptions on the way to new all-time highs. You know, one of the things I was thinking about too with Warren Buffett over the weekend, and I did reflect on this a great deal during this last couple of weeks' broadcasts. It's stunning when you think about how few good decisions you have to make. Warren Buffett made this statement. We've had about 12 important decisions. Everything else has been mediocre or poor. Mediocre at best is how he said it. 12 decisions carried his portfolio to, I don't know what it is, 1.3 million times. Multiples what the stock market did. And by the way, 2 or 3 of those were decisions like who his partner was, who they hired on the insurance side. So in his case, 10 or less decisions were right. If you picked Apple after the iPhone, you've heard me say this before, after the iPhone came out, it's been 40-fold increase. You didn't have to catch it at the bottom. The iPhone was in your hand. I saw it on an airplane because we were held at the gate. And the guy saw me staring at it because I'd heard of it. What's different about this? And he goes on to show me what apps are. You don't need to catch an IPO. There's so many stocks that have blown up in the S&P 500 on its way to 10% per year. On its way to amazing returns. And at the same time, they blow up, they go to zero, they quit paying dividends, and they go away and we forget about them. And then they're bought back for pennies on the dollar from someone. They include the airlines that never work. United Airlines is bankrupt twice, American Airlines twice. Heard of Eastern or Trump Airlines? Gone. All of those were in there. All of them. All of them. It's those small group, Apple, Google, Amazon, that are amazing. They carry all of it. We don't have to be right all the time. You know, I love the baseball analogy, right? You get it right 1 in 3 trips to the plate, and you're in the Hall of Fame. We worry so much about picking the low price, what the market's going to do, and everybody tells you you can't know, except the fear mongers trying to tell you to go buy gold or buy an annuity from them. It goes on. So let's go back. I want to show you a reminder chart. Okay, I know you've seen it before, but we've got to show this. This is the impact, and it just blows my mind of being out of the market. This is the last 20 years. A lot of bad times, a lot of volatility, and a bunch of really good times. If you stay fully invested, weird. Are you ready? It's right at 10%. I know. It's so weird. It's just every chart we show. I always like the analysis, right? That if you slice and dice data enough, you get exactly what you want out of it. Liars use statistics all the time, and they do. But what's amazing is it always comes back to this over long periods of time. But here's the deal. If you miss just a few days, you see what happens. Okay. But I want to remind you, when do you think the best days are? Well, they're right next to the worst days. Right next to them. Yeah, you're that good. Oh, I'm going to miss, a bunch of the bad days, and then I'll get back in and catch the good days, and I'll be really good. No, you won't. And this is why we say over and over again, it's not just us. It's not just Warren Buffett. It's not Peter Lynch, Michael Price, and John Templeton. No. Only you can time the market. No, you can't. But the more we get our eyeballs and our hearts embedded completely into this idea of watching more and more data float across the screen, it's just, seriously, do we think this helps us to manage money? Of course it doesn't. It makes us fearful, which is what they hope for, because otherwise you won't watch. I know it's like this big conspiracy. I'm not a conspiracy theorist. We just know from the Nielsen ratings that nobody watches CNBC when there isn't a meltdown going on in the world. We know it. We know it. It's a fact. Nobody cares. But if the market is having a perfectly normal, certain to occur over and over again, all the days of our lives, market correction, we watch. And we may even have to tune into CNBC's special report at 6:00 tonight. Market meltdown. Tune in later. Like 12 hours during the day. Now we got to do a super special at night. Why? Because the ratings are good. Does that help you? Or does it hurt you? When everything shows that fear doesn't work. Fear makes bad decisions. Fear is not a driver of good investment decisions. It is not. So I come back to, do I need to predict whether the debt ceiling crisis is going to go well, go poorly? Do I need to understand it more and spend more time in the data? No, I don't. I can't time it. I can't know it. And that's where it really is. And besides, guess what? It always works out, doesn't it? In the end, everybody's, oh, yeah, that side, my side, these guys are terrible. They're awful. Those Republicans are this. The Democrats don't ever want to work out, whatever. And now we've reached a point in our country where we can't even talk about something that is dying. Medicare, Social Security, can't talk about it. Can't make changes. Haven't been able to. Ronald Reagan was the last person to sign legislation to change Social Security and make it last longer. So what's the decision process? Well, my party thinks we just want it to blow up. Well, my party thinks it's crazy. I believe we are going to start talking about this. Divided government is not bad at all. It's not. And I also think that the average American wants to have discussions. They don't want to just go, no, we don't. I just want to wait for this to blow up on my grandkids. I've never had a client say, I really don't give a rip about my grandkids. I want to dump 30, 40, 50, let's make it 60 trillion of debt on them. That's what I want to do. Just give me my stuff now. Don't try to work things out. I don't want to talk about it. I don't want to think about it. It's crazy. Of course, everybody wants us to work this out. And we will. We will. It'll take time. It won't be perfect. Maybe the way you want to make it work out isn't exactly the way they compromise and make it work out. But that's what this is about, is trying to figure out how we can move forward and quit just writing checks for nonsense. Not just nonsense. You may agree with the nonsense, but things that we can't afford. That's what this is about. And we're going to do it again. And that's why they never seem to get rid of this thing, because both parties want to talk about this and use it from time to time as a tool to make change. We need to. We're spending too much money. Government's gotten too big, and it's slowing down the economy badly. It's causing inflation and all these other things. You know what they are. but stay off the pages. It's not helping us understand what's going on. This is part of the process. It's got to get all nasty and dirty and terrible, and then we get some change. And then we move on to the next crisis. I don't like it. I don't like all the angst that people feel. I wish I could just take that all away, throw it off in the corner. But the media isn't helping. It doesn't help at all. And apparently we don't help because we watch. And we watch more when there's crisis. And we got to dial it back. We just got to dial it back. Jen, let's go to our last couple charts and let's see if we have any questions.
I think that was it. You went through all your
Oh,
charts.
was that it?
You're done.
All right. Well,
now we're opening up for questions. That went quick, huh?
It went very quick. And, I guess as we're waiting for questions, hands up, if you will, please chat. That's always easier. I know I can sound like a broken record about these things. Some people have tried to cast me as a Pollyanna of some kind, and that's absolutely absurd, because what that really says is I don't want to hear the numbers. I don't want to hear that America solved its problems, that technology is racing ahead. I don't want to hear about the fact that maybe, just maybe, technology is going to get out front and solve all our problems, because it always has. There was only supposed to be 1 billion people, then 2 billion, and we're at 8 billion. You couldn't walk near the Hudson River on a windy day 30, 40 years ago. There's more people there now, and they swim in the Hudson River now. LA was, I remember going to LA when I was a kid. It was brown, just like they talk about. It was brown. Now you add another 1 million people, and it's clean. We've reduced emissions in this country by 80% over the last 25 years. That's good. We got more to do. How did we do that? Technology, predominantly technology and fracking, which allowed for natural gas production right here, which reduced the coal, and technology in engines and so on. It doesn't mean we don't get better. It just means we can also say that you being shown film strips in junior high that the world was ending is stupid. Just as stupid as today, that it's all over or whatever is going to, this is what the world's going to be in 100 years. No, it's not. Nobody knows. But technology is amazing. And when we don't think that technology can solve problems, including inflation, by the way, we have a huge driver on inflation from technology. Here in the office, we see it day to day. Just don't be so pessimistic, is what I'm trying to say. And I'm not Pollyannish about this. I don't like this world. I am part of that 70% that I don't understand. A lot of the stuff we talk about, what we think about and worry about, doesn't make any sense to me. But I have to take that and separate that, and how much my heart hurts for the direction we've been going and the debt we're piling on our kids and grandkids. And take that and say, you know what? Google, Apple, Amazon, and the ones I can't even think of right now or know anything about are going to continue to solve the problems, because they always have. They always have. Everything we've talked about, everything we're worried about, has nothing to do with how many iPhones Apple will sell this quarter. Not one. Not one thing. So until we have a complete collapse, and I don't care, I don't know how to manage around that. Well, should we, buy a bar of gold? Should we buy an equity indexed annuity? And blah, 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 blah. What fear product should I put in there? Doesn't matter. If it's all gone, it's all gone. Good luck. Hope you have guns, ammunition, and a lot of food. Oh, by the way, you need a military style bunker, because everybody's coming after that. I don't know how to manage about that. There isn't. And so spending time getting fussed up about it makes your investment life worse. Not just that you feel bad, but you're prone to make bad decisions. All right, let's go ahead and grab some questions, Jen.
Okay. Yep. So far, only one question. Are you shifting much money to gold and minerals?
Zero. One of the things I did years ago, and we all learn our lessons as time goes by, right? Well, we try to. I like to repeat mistakes too, just like everybody does. But one of the things that I did do years ago is that I thought, well, it made some sense. If you're supposed to hedge your portfolio, putting in some amount of gold, then why don't we use instead gold mining companies, right? Because they mine it. And so if it goes up a little bit in price, there's a lot of leverage there. Man, you can make decent money. And the answer is they're not very good. Technology gets more out of the ground, that's true, but it's very hard to be more productive in mining as you watch other industries roll and roll and roll. It's not just the fact that most gold mining stocks go to zero, okay? That doesn't really attract me, but it's also the ones, even the big ones, just haven't been performing. So I learned my lesson 30 years ago. Gold moved a little, it moved a little, and then gold went right back into the same place it always has. I always like to use this example. When I started in this industry 40 years ago, 1980. God, it's even more than that now. Okay, time rolls. But anyway, I started in this industry. The Dow Jones Industrial Average was at 800. Gold was at 800. Not including dividends, we know where the Dow is now. Including dividends, it's what is it, Jen? It's something like 100,000, 90,000 is equivalent.
Yes,
it's crazy.
Yes. Sorry. Yep.
That's okay. And you know what we need to do is we need to find that number again, because I've said that a few times, and we got to get it. We want to be precise on our data.
Absolutely.
Yeah.
Yep.
The answer is obviously 30,000 is enough of a difference, and we all know what's happened, and it's made all of us rich. And as I define, I don't know. I know you're not as a billionaire, so maybe you're not rich, but that's the world's definition. But we have more abundance, and I have more abundance in my life than I ever imagined I would. And I'll bet you all feel exactly the same way. I never thought I would have this much financial security and live this way, because we all do. Okay.
An add-on to that question was, how about minerals used in batteries or solar?
Interesting question. Yes, that is over. We will, when everybody stops talking about it every day, okay? Because what happens is you have really bad mining companies that are losing tons of money, their stocks being bid up because everybody knows, you know, we need lithium and things like that. And also, I think technology will help solve that, because we all know that there's so much misinformation, propaganda out there about electric cars. You just can't, we can't do it. We can't produce enough electricity. We can't produce enough stuff. But the idea that you just have all these minerals and you pull them out of the ground carbon free miraculously, and then you ship them somewhere carbon free, and then you build batteries carbon free that you never have to dispose of. Anyway, all the numbers come out really quite poorly for this. So to me, technology is going to be driving those costs down. So I don't think lithium is going to sell for gazillion dollars a ton in the future, because I think we're going to be able to use less and less and less and less, because we have to. And the technology, and there's everything banking on it in the world. We have to get these minerals down in price, down in use, to be functional. We can wish all we want that everybody gets to drive a car with a windmill on it, but it isn't going to fly. And in California, you go to these charge up stations. I know I've told this story before, but it's true. You go up to these beside the freeway charge up stations, and around the corner, you can't figure out where the power poles are. It's because they're being run by diesel. They're diesel generators. It's a hoax. We have to get back to the real part of that, and I think that technology is going to do that and solve those problems. So again, I think those are great areas. If we stop talking about them, it's interesting, but the stocks haven't performed anywhere near as well as the hype on it. Good thought, but I'm preferring right now, as we think of those types of companies, that you think of them as a very small part, and you also think of them just in the form of an exchange traded fund. No problem there. We use them for the Internet of Things, you know, big broad picture of the Internet of Things. But I wouldn't want to get so specific like to lithium producers. I want to have components, right, of the whole thing. You know, and one of those big components are going to be companies like Apple, actually, because they're just going to do like the technology in your car. They don't have to make cars that way. It's to be the software. You plug it in and you play. So there's a lot of technology running around out there. Google's another one. So there's a lot of different ways to play this. Minerals are tough. I appreciate that question, though.
Good. I think that's it.
Okay.
Oh,
Great.
wait. Here's another one. Charging stations in northern Idaho charge Phillips $11 per charge for my friends with Teslas.
Yeah, it's still cheaper than gas, though. I asked a
Yeah.
buddy who has a Tesla. I still want a Tesla. Don't get me wrong. I think it's grand, unbelievable. Although they're frighteningly fast cars. I mean, seriously, it's dizzying, and the technology is amazing. And back to that, I just wouldn't bet against an Elon Musk solving this problem, solving the problem of Twitter, to making it a free speech place again. All of these things, I am very excited about some of the changes we're seeing in this country right now by business, and running hard on these technology fronts is a big thing. I don't see the cup as quite half empty right now. I understand it's not full, and we've got a massive problems. We've got, if you will, we've got a political situation that has the sitting president that 70% of Democrats don't want him to run again. Okay, something like close to that. His approval rating is the worst we've seen, maybe even worse than Jimmy Carter. And we have another president who lost the election that the vast majority of Republicans don't want him to run. These are the top two? No, don't buy it. Don't worry about it. Election's a long ways away. But in the end, don't we usually get the candidates that we want? Usually? Maybe they're not good, but collectively, and they're not yours, but they're collectively, Republicans end up nominating who they want. Democrats nominate who they want. And if they don't want this one and don't want that one, I can't imagine that's where we get.
I just want to add too, when you talk about being Pollyannish, I always say, just because you're optimistic doesn't mean you're Pollyannish. Optimism is what you always say, the true realism, right? If we want to really do anything, we are always optimistic about the future, or we never wake up in the morning, right? So I just sometimes stop and think that I really appreciate the positive message, because it is super important to remember that.
Yeah. Good. I like that. Good
All
place
right.
to close and say thank you so much, everyone, for spending a few minutes with us. And if you have a topic you want to hear about, let us know. I've got one more thing after I conclude this part of it, though. I really want you to hang in there for one more second. I do want you to chime in, and also remember any of them in the past. If you're not there, right at noon or whenever, all of this stuff is out there on YouTube. Okay, and this will be there if there's a friend of yours you feel really is needing it, family members, all that. Sometimes people just need to be reminded. That's all. We've been seen and heard from an awful lot of people, including just yesterday. People have been with us for 35, 40 years that are really worried. They really are. And one of the reasons is their families in their ear constantly, right? We got to watch our inputs, and that includes the people we hang with as well. It's nothing to be afraid of. Okay. I want to mention this. We're going to become Schwab. I've almost forgot all of this part. And we're transitioning. You're going to get information as we come through this. There's nothing you have to do, to my knowledge, unless something else comes up. We will certainly let you, the one or two of you, if there's something weird that we have to do. But everything should happen over Labor Day weekend. It's been happening. It's been in trial. It's taken a long time. Schwab bought out TD for like almost 3 years ago now. And so this is processing its way through. Now you've heard some things. We'll continue to hear some things. That Schwab has a banking side to it. Yeah, they do. They all do. Why? But it's only available for people who have Schwab accounts. It's not like they have a banking operation. So comparing it to what happened with Silicon Valley Bank or any bank is ludicrous. It's only available there. Okay, that's it. It's only available to clients of Schwab. That's it. Mostly super high net worth people that want to get a mortgage against their property or something like that. It's not a bank in a banking sense. But here's the bottom line. The bank is not your custodian, period. It's not like there's a Chinese wall, or we don't really whisper across this pretend wall that they talk about at brokerage houses and stuff. No, it's not an invisible wall. It's a rock solid wall that just says you are a bank. That's banking assets. They're not part of the custodian, which is what you are a part of. Not one of you on this call has a banking relationship, at least not one that I'm aware of, with Schwab or TD Ameritrade. Okay. It is a custodial. The custodian is completely different. There's not any issue of $250,000 limits. All they do is custody your assets. We're not involved in this. You don't need to worry about it, even for a second. Your money's not going to go away. Just wanted to make that very, very clear.
Can we add one more point too, Dave? I know we totally forgot about that until just now, but a lot of times we've had some set aside cash for folks and they're wondering where that shows on their statement. So,
thank you for that.
Yeah, sorry, I completely forgot until just now. So this
super
is
important.
Yes.
I can't believe, because I see her on the call and she just called me about this and I told her I was going to use it.
Yes.
So thanks, MC. I appreciate it for you letting us use this. Okay. But this is just one of the accounts and that she has and in here. I'm not seeing very well, Jen.
It's right here at the bottom. Yep.
Okay. Right there. It'll say something like Schwab Money Market account right there.
Yep. It says Schwab Valley Advantage Money Fund.
And that's a money market and it's daily liquid. In addition to that, so that you're aware, there could be something that is JSPT, which is an ultra short-term bond fund, meaning it has like 3 months. Anyway, it's just treasuries. Okay. And what USFR is the other one, big one. We have a lot of money in USFR. I use it as well. It's actually what, 5.2, 5.3%. Might even be a smidge higher because it's been adjusting. But that's where those are in your account, but those are not moving around. Those are just daily interest ones and are available every single day if you need the cash. Okay. So don't worry that it's not in there. Just look. And if you have a question, just like this sweet old lady did, I know you're not that old, but yes, we all are. Okay. And I know she's laughing at me, so that's okay. And so at any rate, it's just it's there. But if you have questions, that's what we're here for. Goodness gracious. We're up to 10 people now to make sure you have enough people to talk to when we're, busy or you just have a quick question. And we're going to keep doing that. We still want to hire great advisors. We're still looking for that. So that also brings me to a son and daughter out there. That's a super smart whip. Hey, we'll talk to them.
Yeah. Also, one question Diana asked about, are we accepting new clients?
You go ahead and answer that.
Yes, we are. But how we structure things now is a little different than it used to be. We have two really good advisors that have joined us. One is Mike. He's been here for over 2 years now. He came to us as a CFP. So he had done a lot of education. He lived in Colorado. If he's listening to me, and I'm sure he is, turn on your camera and unmute. You could introduce yourself. He's been around for a long time and he does a really, really good job. So people meet with Mike initially. And then we also had a gal. There's Mike. Mike, if you take a second and introduce yourself, I know, putting you on the spot.
Everybody, a lot of you already know me, but I'm Mike. I'll turn my camera over and advisor.
That's Miss Melissa. She's been here a good couple of weeks now, but she also has some financial planning experience. And she's not new to the industry either. We're really looking for people that are somewhat new, but not completely new, because we can mold them into what we think an excellent advisor should be. So when you first call in, you'll meet with Mike, you'll meet with Melissa. If Dave and I are here, of course, we'll always come say hello. Tom is still here. He's been with us for over 20 years, not quite over, but or close to 20 years now too. And we all just work very closely as a team. It's important to us, but those initial fact-finding meetings will always be Mike and Melissa.
Good.
Okay. And I think we have one more question. Let's see. Oh, Randy says, hi, Mike.
All right, good. All right, well, let's go ahead and close it out now. And thank you for tuning in again. Once again, we're here to take care of you. It's what drives us. So if you have any questions, please call. Have a great day.